late good morning to everyone. So starting this session is going to be ASX listed Alkane Resources, and we've got Managing Director Nick Erner.
Fantastic. G'day everyone. Yep, I'm Nick Erner, the Managing Director of Alkane Resources. Our ticker on the ASX is ALK. We're an Australian gold producer, excuse me, and explorer. We've actually been listed for over 40 years under the ticker ALK, and we're incorporated in 1969. We've got one producing gold mine, does about 70,000 ounces a year in New South Wales on the east coast of Australia, and we have one major exploration asset, as well as a lot of other exploration, also in New South Wales, a large porphyry deposit that we call Boda and Kaiser. And it's those things that I'm going to go into particularly today. And I should leave time for questions, and feel free, I'm very approachable at the end. So I'll tell you a little bit about the different components of our company. But the main takeaway for anyone listening online or for you guys here is we explore, then we either trade that or develop that. So some people explore and then trade, but we have a consistent record of also developing our own assets, and we tend to do both of those things. When we operate, and we're an owner-operator, we run our own underground mine and the mining fleet, and we did the same when we were an open-cut producer. We've exceeded the guidance every year in operation. We started this gold mine in 2014, and we've made a profit every year. We have a very successful track record of exploration. I'll dive into some of those deposits. For people in Australia, they'll recognise some of those names. For people here in the States, they sort of don't mean that much, but gold mine there, several million ounces in a lot of different discoveries, and also a rare earths company that we spun out that I'll talk to you a little, because that's what I mean by strategic deals to create value. We're not particularly wedded to anything that we own. We're wedded to making a profit. And so we've made strategic investments in the sort of, remember when developers were in a bit of a hole, particularly in Australia in the probably sort of 2018 period, we made some strategic investments to try and make some M&A plays. It's the most successful, unsuccessful strategy we've done. We made $55 million profit trading in Genesis. We would have loved to have taken that over ourselves, but instead they've become a really successful company under the leadership of Raleigh Finlayson. And we also own 9% of Calidus, a West Australian gold producer. And clearly, we're a company that has reasonable technical capability, but also we've got a pretty strong balance sheet. In Australian dollars, we've got over $100 million worth of cash and listed investments to do the things that I'm going to tell you about. We have an undrawn facility with Macquarie Bank. So a little bit about us. I put these highlights up because it tells you a little bit about the way we go about doing business. So we exceeded our guidance. As I said, we often exceed guidance. Did about 70,000 ounces last financial year. We do July to June, like a lot of Australians, for financial year. Our original guidance was less than that, and I'll talk a little as to how we exceed guidance often. Our all-in sustaining cost has moved a bit over the last 12 months. We expected mid-range guidance for FY23, and we got 1,602 Australian dollars per ounce, and our guidance this year is higher than that. I'll go into that a bit later. We've increased our resources. We now have an approved life of mine plan that goes out to 2032. We did a sort of full expansion and extension of it, and we declared nearly 15 million equivalent ounces in our major resources. So it was pretty good year for us actually last year. A little bit more about the company. We've got 600 million shares on issue. Market cap's about 380 Aussie. So I can't do the US in my head. That exchange rate moves so quickly, but we're roughly 2/3 of that to get into US dollars. And as I said, we've got a pretty strong balance sheet at present. Our chairman, Mr. Gandel, who you can see in the top photo, he owns just under 20%, and other management, including myself, make up the other sort of 2.2, 2.3% there. And Mr. Chalmers in the centre, our technical director, he was the managing director prior to me. I've been with the company a bit over 10 years, Ian for longer than that. And then he's moved to being our technical director, and he's the most active semi-retired person I've ever seen in my life. Let's call him full-time in his retirement, working for us as a technical director. And the exploration success of the company is largely attributable to his leadership. But as you can see, we're nearly 60% retail held, most Australian retail. So this is the area of Australia I'm talking about. It's about 4 hours drive from Sydney into the northwest, like a mining area with large mines such as North Parkes, Cadia and others in it. And then you sort of head west to Broken Hill. So the scale you can see there, the things I'm going to talk about that's a blowout of that is that's our mine at Tomingley. And then to the right of that, you can see Northern Molong Porphyry. That's the major exploration project. And then we have the blue is our exploration tenements. We're one of the larger explorers in the New South Wales region. And we're certainly the most consistent, including all the majors. And then the other thing to note as you look at that picture is you can see that there's a town, Dubbo. That's a town of 45,000 people, large town. Parkes, 15,000. Orange, nearly 50,000 people. Each of those have major mining centres, fabrication, maintenance, etc., because of the large scale of mining that occurs in the region. So it's a mining and agricultural region. So let's talk about our gold mine, active producing gold mine. Runs at 1 million tonnes per annum. We typically run at 1.1 million tonnes per annum per year. And we can now had approval to run that up to 1.75 because we run it higher on oxides when we do open cut. We've got 230 employees, another 70 odd contractors. As I said, we met our upgraded guidance, got a slightly lower guidance, 60 to 65,000 ounces at an all-in sustaining cost of 1,750 to 2,100 Australian. And I'll explain why that is as we move on to talk about the expansion project. We have an underground mine. We've mined out 4 open cuts. We've got an underground under 3 of those. And we continue to do extensional drilling. So the existing underground we've extended its life year on year. And at the moment, it has about 18 months to 2 years under it. Of course, we have a lot more to the southern regions that I'll talk about. And we've got, roughly 2 million odd ounces in total resource for the whole area that I'm talking about. So that's operation. It's been profitable the whole time. A lot of people ask me, at that grade, how do you operate that underground profitably? Well, number one, it's a residential operation. So we're not paying fly in, fly out, which we see a lot in Canada or Western Australia. So our labour on costs are less. 2, it's in a mining region with a lot of support services. So the support services are generally cheaper and transport and logistics is cheaper from the east coast of Australia. But other input costs also don't have those transport costs, so reagents and steel cost a little bit less than some of the other producers. I also could tell you it's just wonderful leadership, but that's an incredibly long bow to draw. A little bit more about us and how we go about it. So you can see that we do reasonably conservative guidance. One of the reasons for that is that our ore body has a fair bit of visible gold in certain areas, and so that's been top cut geostatistically. So often when we mine through those areas, we get the gold that we hoped would be there, but we couldn't geostatistically say is there. So we often exceed guidance due to that reason. And it's one of the reasons why the guidance range is wide for this coming year, because we're moving into a new ore body that we're yet to see whether that reconciliation trend will continue. We think it will, but we don't know. And we've continued to grow the resources of the mine there. And so let's talk about the extension of the mine life, because it's sort of unique for a small mine to then push its mine life out for another decade, which we have out to 2032. So this is to the immediate south of our mine. You can see that in the picture on the right-hand side. That's the existing underground. We've put a drive in, which we've finished, which goes 2.5 kilometres down to a new area that we've had approved. That was approved earlier this year. We've had all the subsequent mining leases and all that sort of stuff granted. That's no mean feat in the state of New South Wales. It's sort of a cross between California and Nevada. I don't know, right? Like in terms of getting approvals done. But this is flat farmland. It has a highway in the middle, but flat farmland, and we own all the land underneath it. We've done a lot of transactions in the last period to buy those. So this is our mine, and we'll be mining ore from that in Q4 this year. So just in a couple of months, we've got the vent rise in. It's all going great. Tailings dam storage, all the things that you asked. We've got water for the expansion. And then as well as that, when we kick the open cuts into this in another 2 years, we'll lift that to 100,000 ounces. So when this underground comes online, it's higher grade. We expect to move to about 85,000 ounces, and then the year after we expect to go to 100,000 ounces a year, which is great because we already make profit at less than that. And we do have a hedge book. We put 100,000 ounces of hedging at Australian 28.25 in place to get the $50 million debt facility out of Macquarie. So we're well set to go and get this project done. It's got a paste plant, it's got a flotation plant going in. So the key takeaway is 70,000 ounces or more over the remainder of the decade profitably. We're also very, very successful explorers. We have an exploration team of roughly 20 people, including our field assistants, not including all the drilling contractors. And we've discovered a lot of things over the years and developed them ourselves. We discovered the original Tomingley deposits I just talked about. We discovered the Peak Hill deposit, which is a mine we ran from 1995 to 2004. We discovered this Bodo deposit. We discovered a rare earth deposit that we put into a whole separate company after a long period of time that we spun out that ended up being worth more than Alkane was worth originally. Our shareholders love that, which is great. They made a lot of money out of that. And so anyway, we're very, very successful explorers. And so the key takeaway out of this is, but we're not wedded to the projects. There's a small mine, well, not small, in small text you see McPhillamys. That was a project that we developed of 2 to 3 million ounces that we joint ventured Newmont in and then sold to Regis Resources for $150 million. So we're not wedded to holding our things if there's a successful transaction. And of course, you can see our exploration costs there are very low. But why is that interesting? Well, it's because of this. This is our large porphyry deposit that we've discovered. So this is two parts I'm going to tell you about. Boda, which is the bottom half of that picture, and Kaiser, which is the top half. That's one complex that goes over about 3 kilometres, and then the whole mineralised region. This is a large porphyry-style project, similar to, I guess, what you guys here in the States would see up in British Columbia and Canada. But similar as well to other porphyry deposits here in New South Wales. So at Boda, where you can see the large density of drilling there, we have a nearly 10 million ounce equivalent at the lower grade cutoff there. And just note the gold equivalent is 0.6 at a 0.4 cutoff. So as we start to dive into underground mining options. And Kaiser, we have another 5 million odd equivalent ounces. So that combined resource is just under 15 million equivalent ounces. And you can see, when we look at the two shapes, Kaiser itself is a natural open cut. I haven't got the Boda resource picture, but it lends itself to an open cut with an underground going underneath it. And what are we doing with all of that? So that's it there in the bottom right of that picture, and that the rest of the the other intrusive complexes throughout our exploration tenements. But that's where we've done the majority of the drilling. What are we doing? We're doing all the logical things. We're now changing that inferred resources to indicated. We have the last Boda resources coming out in early October, the last Boda results, sorry, and that resource model should come out in approximately mid-November. We obviously expect that to both upgrade to indicated and increase in size because you saw all that drilling to the south of the existing resource. And then we'll incorporate that into a preliminary economic study once we've got Kaiser, and that will come out, circa March next year. But how might we mine that? Logically, it will be like any other development. We'll start with an open cut, move to an underground mine, and then probably run an open cut and underground in sequence. Remember those grades around 0.6? We could probably get a mine grade of around 0.8 equivalent grams per tonne, and we know that large porphyries running at 10 million plus tonnes per annum are making profits, pretty good profits at that. A company of our size with a 400 million market cap, we would look at something like a 10 million tonnes per annum. If we can attract a partner, we would look at some other economic scenario for that. But we ourselves will progress it. So if we look ahead a little bit more, there's a hell of a lot that needs to be done in order to get a mine approved. And we have been doing that for many, many years as a team, and we've already started doing that for Boda and Kaiser. So we're doing all the metallurgical test work, and we've done one set, we're doing a whole set more detailed, preliminary costings, layouts. We've started to acquire the land that lies underneath it and start to negotiate with farmers. We're doing our baseline environmental studies. In New South Wales, you do at least 2 years of studying baseline, and then you go through the approvals process once you've done the evaluation of that. As well as that, we continue to drill testing for high-grade extensions and resources, because logically, the more higher grade you have, the more rapid your initial payback period is. So that's what we're doing in Boda and Kaiser. We have spent roughly 50 odd million bucks Australian exploring that to date. But once we've done that preliminary economic assessment, we then say, okay, well now what do we do here? Do we continue to chase high grade to expand the size of the resource? Do we charge ahead with production, or the path to production? So that's a really, really interesting 6 months for us. For people talking shareholder value, that's broadly not recognised in our share price. If you have the time to go and look at ourselves and the profit that we make versus other people and the mine life that we had ahead of us, you'll see that this doesn't get a lot of recognition, and that's okay. We have to wrap a value around that for people to work it out. But then the big parts of it are just getting it done. There's nothing people on the ASX like worse than not meeting guidance. I don't know, you can exceed guidance and maybe go up -2%, and you can not meet guidance and go down 20%. So there's a really leverage to meeting guidance and exceeding on the ASX. So that's certainly good that we do that. So we're going to get on and get that plan done at the mine and take that through ramping up and making sure that the potential of those resources are fully understood by everybody. And as well as that, we continue to actively manage investments. In an ideal world, we would be able to find other pre-development or near development producers and come together to de-risk our base and produce more cash flow for other developments or to return to shareholders. So that's Alkane, ASX ALK, gold producer, successful explorer, 100 million in cash, really set to move ahead with a very, very, very interesting porphyry deposit that's largely unrecognised because it sits on the east coast of Australia, and people tend not to really look at that region because it's stable, it's in farmland. I really don't understand why people don't look at it. They'd probably much rather look at an investment somewhere where the government will take it off them. But in Australia that doesn't tend to happen, so it's pretty good. So thank you very much, and if there's any questions, I'll happily take them in the remaining couple of minutes. Thanks.
So we do have a couple minutes for questions, if anyone has one.
Yep.
What's the status of your rare earth prospect?
So the rare earth prospect was at Dubbo, and that got put into a company called Australian Strategic Materials and demerged from ours in a full in-specie distribution in July 2020. Yeah. Yeah. So we don't retain any cross shareholdings in that at all. That listed at about 130 million market cap, rents nearly 2 billion, and is currently sitting around 300 million as on the trials and tribulations of developing a critical metals project. Yeah.
Still have time if anyone else, otherwise I'll just ask one quickly. Just and it might have been on the slide, I just couldn't see it, but on the hedge book, how long is that lasting for?
Yeah, no, thank you, I didn't say that. So those hedges go out to December 2026 at a pretty much flat profile, and that profile is about 40% of our production across the period of time. Aussie 28-25, yeah.
And then once you get to 2026, would the plan be to continue a similar hedge book, or is it kind of to be more just completely levered to the gold price?
Yeah, so we are very, as you can see, probably have guessed, we're somewhat conservative, and so we tend to always have a degree of hedging as our stay-in-business thing, particularly depending how we're deploying capital on different things at different times. So it really depends on the capital that we're deploying. Otherwise, we tend to run around a 20-25% stay-in-business hedging, because we all know that when the market corrects, gold gets sold because it's liquid, and everyone is taking redemptions and they flog off their gold, and then it's sort of you go through a bounce period. We always want to make sure that we're covered through that 3 to 4 month period if everything goes a little bit pear-shaped.
Great. And then just quickly, you mentioned you're pretty active on exploration, you have a pretty big team, you're spending a lot of money, and then you talked about actually doing some M&A, small M&A and stuff like that. Is there anything near term that's exciting in the M&A front, whether it's a small investment,
not really,
let's say 6 to 12 months?
Yeah, it's a pretty challenged environment out there. I think it depends which market you're in as to whether there's access to capital, and so a fair bit of that access to capital reality has yet to bite a number of people. And it takes us a while to get quite familiar with people's geology. So yeah, we do have a few irons in the fire, but we tend to look around that 100,000 ounce producer level, yeah. So nothing absolutely going gangbusters I'm about to announce next week, but yeah, but we do continue to evaluate, yeah. I know that that's a little bit wishy-washy, but the best way to read that is to say that I don't think the true value of many projects is yet realised on the ASX developer space.
That's great. Well, thanks a lot, Nick.
Okay, thanks everyone.